Okay, so now we have all the information we need. We can summarize all of this, get the after-tax cash flows, and do a net present value. So we look at our incremental after-tax cash flows. We have our sales revenue. We have our operating costs. That was in the previous sheet. We know where our taxes are in the previous sheet. So we have our operating cash flow. It's simply 1 minus 2 minus 3. So sales revenue minus operating costs minus taxes equals our operating cash flow. Note we have taken depreciation out of there, so we haven't included it at all, nor have we discussed net income. So we are ignoring or getting rid of those. So this is only operating cash flow. In line 5 here, as we go down, line 4 is operating cash. Line 5 is the total cash flow of the investment. This is the end of the previous or slide 2 slides ago when we did operating cash flow for the investment. So remember the negative 260, and then the operating cash flow was negative 632, 825, and then the big 192 at the end. So remember the previous slide we talked about where these numbers came from. If not, review the video and go back to it. But that's where they came from. That was the incremental cash flow from the investment itself, not from the revenue or income generated from the cash flow. So now we combine the two, and we see that the income after tax and the cash flow is 4 plus 5, which is the operating cash flow plus the total cash flow of the investments. It gives us, in year 0, costs us 260 out. Year 1, we have 39.80 coming in. Year 2, 54, 66, 59, and then the last year, 224.6. Directly below that, you can see the long form of the in net present value calculation. It's an easy calculation to do. You can do it longhand if you want, or you can just stick it in a spreadsheet. Now I'm going to do a complete spreadsheet on all of these numbers for you in a separate video. So if you don't want to do all the calculations here, that's fine. But you can see it's quite easy to do. You simply subtract the 260 from the cash flow of 39, 54, 66, 59, and 224 discounted back. And if you discount them all back, you would see that the answer, even deducting the 260, is a positive 51.58, and that's discounted back at a 10% rate. So this project is positive with a 10% discount rate. I would say that the discount rate or the net present value is significant. So I would go ahead and say this is a green light project based on this data. It sounds like they're going to make some good money on this investment. The net present value of $588 is a pretty good investment, pretty good return on this. It's well over the 10% that you're looking for your shareholders, and I think this investment is a go. If you wanted to do it in the calculator, you could do it as cash flows. Some of you are using cash flows in your calculator with regards to your CF keys on your calculator. You can also do it on a spreadsheet. I told you that's much easier. But if you do it on a calculator, it's CF sub 0 is negative 260, you hit 39, 54, blah, 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 and then you hit I is 10, and you hit NPV, and NPV is a calculation function that says 51,588. So this project is a positive go. It's a positive NPV. Positive NPVs are a go decision usually. Very rarely does a net present value that's positive not get the green light. Depends on other projects, of course. In this case, this is a green light. We're going to say go on this one. We're going to have good positive net present value cash flow. We're going to have a 10% discount factor, which is quite high. So we're pretty confident in this. The other thing is you want to go through the spreadsheet, so because it's much easier to do on a spreadsheet, and then you can get into other things, which we'll get into later, like sensitivity analysis, scenario analysis, and changing some of the variables. What if the machine costs more? What if the salvage value isn't as high? What if the bowling balls don't sell as well? These kinds of manipulations of the data are very difficult to do longhand. They're very simple to do in a spreadsheet. So the next thing we're going to do is look at a spreadsheet, and we'll go through all the same numbers there, and so you can practice doing acquisitions such as increase in productivity through the acquisition of a machine. So walk through the spreadsheet with me next.